Rahul, are you able to hear me?
Yes, sir.
Okay, let me share the screens. Yeah. In theory, we had covered up to payments. Today we will be going into interest calculation. And apart from that, regarding the issue that you mentioned, so we had covered this in the practical class, wherein we created the business partner, followed by the contract account, followed by the contract. Okay.
Sir, I am unable to create a contract account.
Yeah. So you are stuck over here.
Yes, sir.
But we performed it.
And plus,
Yeah. Tell me, Rahul.
plus before also in the project one also I am stuck while importing the general ledgers because as you gave me the address of how we reach that by using control Y I am not able to copy all the GL and plus if I somehow note it down I cannot transfer it to FS16
Okay.
FS15 sorry.
Okay. That is very good work from you, because reaching up to that point also needs lot of activities in the process. You can take your time upon that. You can whatever errors you are getting, try to do some research using the help from Google and all, so that you can crack the issues by yourself. And this also once, because we have created the contract account once, so there should not be any problem. Only that,
The
as
problem was that with company code group.
yeah.
Uh, we had not made any company code group because 1106 1006 was made for company, not for company code group. So by the help of Google, I tried to make it. So it that step got proceeded. But now when now the for making contract account, I am stuck at account determination ID. It is asking something more because I have already made it with the contract for residential consumer, but it is not allowing me to proceed. There is an error screen which is showing.
Yeah, uh, I would say that it will get mitigated. It is only because of some uh, uh, master data that you selected is not having the proper relevant data in the system. Due to that mismatch, it is not getting created, that account determination ID and all. So check with some other account, and once.
Sir, I think I have selected the company code DS01.
Yeah. Yeah, that is the reason that DS01 might not be having all the proper credentials associated to it. So you take
But we,
one of those accounts which is already there in the system. Many accounts are there like XYZ utilities, Patekar and Patekar, like that. Apart from the ones that
sir, which one did you take, sir?
uh, for this contract account creation, I do not remember exactly because here the screenshots are not attached, and I have to go back to my system and check out if I can dig out the screenshots. And also, I saw that of all the recordings that you sent, only the recording of this class is missing. You have sent me the company code creation recording, then you have given the configuration setups, number ranges creation, but this practical class recording is missing. So you please go back to this particular class and do some more background work, and first create these steps one by one, and then try to put that as you need in the project. Hello?
Okay, sir.
Okay, there is no point that something will not get created, only that it will take some time. I also face this issue number of times. If one particular master data that I have extended to create something is not working out, then I go for another master data, and then it works out. Okay, now moving
Okay,
into
sir.
the interest calculation step. See, this is the points that we are going through in business transaction. A little more background I will give what is there before it and what is after it, and then we will start with the interest calculation part. So I have given a request, that is opening the particular page, and it's taking time. We will move on with the part. In interest calculation, we have number one, item interest calculation and balance interest calculation. So the purpose of interest calculation is you use this component to determine and post interest receivables and payables. Features: this component currently includes the following detailed component. Number one, item interest calculation. The purpose of this is this component enables you to calculate interest on date and credit items automatically. Individual items and the business transactions that created them are both included in item interest calculation, which allows you to control precisely whether and how interest can be calculated on an item. Features: the system calculates interest only on those items for which it is able to determine an interest key. The interest key controls interest calculation and can be assigned to contract accounts. Like in the practical class, I created one customized interest key with 0% interest. So that is the interest key that we are talking over here. The interest key controls interest calculation and can be assigned to contract accounts collateral, individual line items, or dunning levels. So interest can be assigned at all these four levels. That is the contract account itself, then the collateral, then the individual line items. At each level, the contract account might be uh, having some due, then he pays, then there is some amount left, then there is some return. So at each level, interest can be calculated. The system normally determines the interest key for each industry, but can also do so on a customer by customer basis. So if a customer is a good customer, we charge less interest for that particular customer. We know that he pays in time, he orders for large consignments, so we keep that customer happy with charging less interest. Then interest calculation, we have interest can be calculated on the following items: open or clear debit items, installment plans, credit items such as credit memos or cash security deposits, and other. You can calculate interest on debit items when processing individual line items. Interest is calculated on a business partners or contract accounts line item. Using mass processing as part of a dunning run or as a mass activity, interest can be displayed on the dunning notice. So even in the dunning, the notice that I send him, uh, upon that also interest can be getting calculated. Like I have sent you a dunning notice 3 days back. You have 3 days in hand to pay, and for that interim 3 days also interest can be added. You can calculate interest on credit items using the following functions: processing individual line items, mass processing. To determine the way in which interest is calculated, you can choose interest calculation methods by which the system determines the number of days on which interest is to be calculated for a given interest period. Define interest rates based on date and amount in the system. Use reference interest rates such as discount rates. So as we discussed earlier, the rate is the lowest entity in the system. This also needs to be entered during configuration as well as for customizations. For a customer, you can decide customer to customer what the rate you are charging him. One customer who is a good customer, you can charge 10% interest, whereas a moderate customer can have 15% interest. Next, moving into done during an interest run, the system calculates and posts interest and creates the required data for correspondence. To help avoid charging your business partners very small amounts, you can carry out amount checks per customer or industry. Interest locks enable you to prevent interest from being calculated on certain items. So at this point, we are talking about interest locks. When you lock a particular uh, contract account upon which no interest will be charged for a particular number of days. You can also exclude certain business transactions such as reversal postings or additional receivables for interest calculation. Interest can be posted so that it is also posted to the general ledger. Debit interest can also be posted as a statistical item. In other words, not posted to the general ledger. For each interest item, the interest schedule tells you how the interest amount was determined, including source items, interest period, and interest rate. This allows you to reconstruct how interest was determined at a later date. An interest history records the interest calculation period or each line item on which interest is to be calculated. During interest calculation, the selected items and the interest history are considered jointly. This ensures that interest is only calculated for items once for a certain period. So periods are set in the all accounting areas like the first quarter, second quarter, third quarter, fourth quarter. A year is broken up into these four periods: January to March, then April to June, then July to September, then October to December, and whatever bank balance we have got these on particularly this period ends, the interest gets calculated and some amount is credited to our account. So this is how all financial systems work when we talk about periods. Then how the interest calculation works in the utilities industry, that is ISU component. You can store interest keys in the system for transactions. When posting, the system determines the interest key in terms of the transaction specified for the line item and then stores it in the line item. As in a Dunning run, interest can also be determined and posted in invoicing. If you implement the invoicing component, you can include interest on invoice printout. So utilities industry is the main industry when we come to SAP FICA, and all the rules and regulations in interest calculation are fully applied to the utilities industry, and that is the you can consider the most standard area in which you get the interest calculation features properly in place. Then moving into telecommunications, you can store interest keys in the system for transactions. When posting, the system determines the interest key in terms of the transaction specified for the line item and then stores it in the line item. So here, as per the rules, the interest is charged upon the line items. Now moving into the next pattern of interest calculation, that is balance interest calculation. Purpose: calculation of interest on the balances of contract accounts. That is, whatever balance is left, we are talking about that in this particular category of interest calculation. Prerequisites: you have made the following settings in the implementation guide for contract accounts receivable and payable. That is business transactions interest calculation, item interest calculation. In item interest calculation, we define interest calculation rule, then define interest key. And in business transactions interest calculation, balance interest calculation, we define specifications for the balance interest calculation, that is posting area SO82. Then define specifications for resetting balance interest, that is posting area S400. Then assign withholding tax codes to main and sub transactions, that is posting area 1086. Then under business transactions reversal, define default values for reversals, that is posting area 1050. You also have to make the following specifications in the contract accounts relevant for the balance interest calculation. Set the indicator balance interest calculation you can only set this indicator when you create a contract account, and you can then no longer change it. So for balance area, only difference is that the posting areas are mentioned against which we calculate the balance interest. If you want to carry out periodic balance interest calculations, define the base periods and base days offset for interest calculation. For example, T date on 5th of month. Interest calculation base period, that is on the 5th of the month, you are setting the T date. Yearly, half yearly, quarterly, or monthly, the determined periods each begin on the closest dates according to the normal calendar. A year on 1/1, a quarter on 1/1, 4/1, 7/1, and 10/1, and so on. That is 1st of January, 1st of April, 1st of I guess this is July, and finally 1st of October. Interest is always calculated on a whole period. The interest is therefore always calculated to the end of the last full interest period before the issue date. If no interest is specified, the interest is calculated up to the issue date. Interest calculation base days. You can use the number of base days to move the start of an interest period. This means, for example, that for a base period monthly, base days 14, interest is calculated from the 15th of a month to the 14th of the following month. So in case you are charging a customer based upon a loan that he has taken from the company, in that case, the interest period, base interest period is set from 15th of a month to 14th. So on 14th, you send the invoice having the interest charges which the customer needs to pay. The number of base days can also be negative. Note that if the start of an interest period is moved to another month by the base days, incomprehensible results can be caused by the differing number of base days per month. The base days are used for determining the first full interest period per calendar year. All further periods of the same calendar year are determined by adding the months. Enter an interest key. If withholding tax is to be posted, set the withholding tax code for outgoing payments. So we create a withholding tax code which needs to be used in case of outgoing payments. Process flow. Determination of balance subject to interest. How the balance subject is determined, we will be talking about that. The system determines the balance on which interest is to be calculated from all items relevant for the interest calculation from a combination of company code, currency, business partner, and contract account. So this combination helps us to determine the balance subject to interest. It calculates interest on the complete balance. This is in contrast to the item interest calculation, where interest is calculated on each item individually. So based upon the company code, currency, business partner, and contract account, the line items will be treated individually, upon which the interest will be calculated. The following restrictions apply. The attributes of individual items cannot be considered in the interest calculation or in the attributing of interest items. For contract accounts where balance interest calculations are applicable, you cannot carry out account maintenance since the due dates of the balance changes would be lost or incorrect. Therefore, open items can only be cleared by payments. Calculation of interest on the items. The interest run selects all items of a contract account that exist for the combination of business partner and contract account specified. Only items that fulfill one of the following criteria are excluded. So now the interest run is executed, and that is taking into consideration two attributes, that is a combination of business partner and contract account that is specified for that line item. They belong to an installment plan. Installment plan changes, charges, and interest are not posted statistically in every case. So there are some cases that some company give you 0% interest EMIs for goods that you buy. So in that case, the installment plan charges and interest and are not posted statistically. The clearing document of the item has the origin, reversal, or return. The item is statistical. Then moving into interest locks. Interest locks at the business partner contract account level are considered by the balance interest calculation run if the date of issue for the interest run is in a locked period. The contract account is excluded from interest calculation. If you start the next interest run with an issue date that is after the validity of the interest lock, interest is calculated on the entire period since the last interest calculation run. The lock is then ignored. Interest locks on the item are not taken into account. However, if an item in a contract account is locked due to a workflow, interest is not calculated on the complete contract account. So there may be different cases in business wherein we apply a lock upon a particular uh, contract account with whom we are having business, and in that period we don't charge any interest. Postings in periods already subject to interest calculation. For each item posted to a contract account subject to balance interest calculation, in event 0010, the system checks whether the net due date or the value date are in a period for which interest has already been calculated. So, for example, the periods we talked about, we will be checking whether the net due date or value date is overlapping or fits in a particular period, based upon which the interest will get calculated. That will be done automatically by the system. In this case, the interest calculation is no longer correct and an entry is created in a table of clarification cases. This is the table name. As soon as you start the balance interest calculation run, interest documents that are no longer valid are reversed and interest is calculated on the period again. The same applies for the reversal of a document or for returns. Event 0020. Next, reversal of interest documents. In a interest, if an interest document cannot be reversed because it has already been cleared or partially cleared, an inverse posting is created for the interest document. Information about which interest documents reverse postings have been created for is retained in the system in table DFS CIREV. This table is available for evaluations if the inverse posting is to take place. Why inverse posting is needed? In some cases, the customer has already has paid, and you find that he has paid in excess. Uh, there was some communication issue for due to which a good that is 100 rupees, he has paid 120 rupees. So we want to return that particular amount to the customer. In that case, we go for a inverse posting. Is to take place in a different fiscal year. The inverse posting is created with a reversal in the subsequent year. The system settings in posting area 0140 are used, and if necessary, the GL accounts are swapped. In implementation guide, we have this contract account receivable and payable, business transactions, reversal, define alternative accounts for reversal in following year. This is the link. If an interest document from the balance interest calculation is reversed in event 0020, the related entries in the interest history are deleted. Installment plans for contract accounts subject to balance interest. If you create an installment plan whose original items and their due rates are in a period for which interest has already been calculated in a contract account subject to balance interest, in event 3026, an entry is updated in the clarification table DFS CIC LARIOB. The same applies for deactivating installment plans. Means when the whole payment has been made, the installment plan is deactivated. If the due dates of the reopened original items are in a period for which interest has been calculated, in event 3041, an entry is written in the clarification table. And finally, balance interest calculation history. In the SAP menu under account, more information, you can display the balance interest calculation history for a business partner contract account. So that was all about the interest calculation part. This comes under business transactions. The meeting will end in about 2 to 3 minutes more. I will just finish up giving these all a few more tips. And your work will be to number one, have that business partner contract account contract practical class recorded, and parallelly move on with the project. So under business transactions, we have talked about debit entries and credit memos. Following that, security deposits. Following that, payments. Now we did interest calculation. After this, we will be moving into dunning, followed by returns, then deferral and installment plans, then write-offs, then submitting receivables to collection agencies, transferring open business partner items, transferring receivables and payables, deferred revenue postings, and finally revenue distribution. So that is all for today. We will be meeting again on Monday.
Okay, sir.
Okay. Have a nice weekend.
Same to you.